Are you overcomplicating your technical analysis? I started trading using multiple indicators and memorizing dozens of chart pattern variations. But that added complexity didn't translate into improved results. In fact, it hurt them. 10 years later, I now have better results and with less effort and difficulty. Don't get me wrong, trading is hard, but it's not complex, or at least it doesn't need to be. Indicators can reduce market noise and draw attention to certain patterns and relationships, and that's a good thing. For example, these swing lines nicely highlight important price pivots. But it's easy to think that, well, if one indicator is good, two must be better, and three better yet, and so on. A cluttered chart leads to confusion and indecision. What do you do when indicators give conflicting signals? Are you missing opportunities waiting for all your indicators to line up? Can you be consistent with so many differing signals? And maybe most importantly, are the indicators drawing your focus away from the price action itself? Adding indicators doesn't provide any new information, just different ways of organizing the same old information. For each price bar, whatever your time frame, you have an open price, a high, low, close, and volume. That's it, there's nothing else. If you want a moving average, you can choose either simple or exponential. You can select any number of past periods to average, but in each case, the results will be built on the same price data. You may want a volatility indicator and select average true range. This also relies on some of the same data. How about a momentum indicator like rate of change? You guessed it, it's constructed from the same price data, as are these indicators, and these, and these. Slicing and dicing past data a dozen ways really doesn't give you better odds of being right. Overcomplication doesn't stop with indicators. We subdivide chart patterns into small variations and sub-patterns. Markets are messy and imprecise. Is that pattern a flag, a pennant, a cup and handle, an ascending triangle, maybe a rising wedge? Just know it's a pullback and don't get lost in the weeds. How do you simplify your technical analysis? Limit your indicators to just one or two. Classify your trades into several broad categories. No need to overthink it. And rely more on watching the price action as it unfolds. To get more trading videos like this one, hit the subscribe button.